On Monday, the European Commission approved €39.5 billion in aid to overhaul Spanish banks. Joining me to discuss this further is Merina Willemse, economist at Efficient Group. Hello, Merina. Do you think €39.5 billion is enough to overhaul these Spanish banks?
Well, I don't think that in 6 months' time or a year's time it would have been enough. I think it might actually be one of many of these bailout programs for these banks and other financial institutions, perhaps even in Spain. I think it will go far as to help the situation, the severe debt situation in the Spanish banks. But I think the whole, probably it could be that the main goal behind the aid is also not just to solve the immediate problem of outstanding debts and try and get the financial situation healthy again. I think it's just also a way to make sure that these banks don't fall over and close in the meantime. And remember, it's also helpful if the money isn't completely enough. It doesn't solve all problems and pay all bills. It's also very important that these banks do actually go on and do serious restructuring in what they spend so that they actually make the serious changes that these banks need in order to be sustainable in the future.
The condition of the aid means Spain's 4 nationalised banks will have to more than halve their balance sheets in 5 years, cut jobs and impose losses on bondholders in order to receive the rescue package. Do you think these are realistic goals for the banks to achieve, and do you think they can reach these targets?
I think these goals might be very hard to achieve, and I wouldn't be surprised if they do not achieve them completely. But it is very important for these banks to have such serious goals to try and achieve, because this is what is going to be necessary for these banks to become financially sustainable once more. And so I think more than these goals actually being achieved, I think the goals actually just being set there might just be a more psychological route that they'll have to make and take throughout the next few years to at least just improve the situation significantly.
Spain's unemployment is already up to 25%. Do you think these extra job losses to gain aid for banks will put an additional burden on the already rising unemployment rate?
Yes, I do unfortunately think that the unemployment rate in Spain would be worse in the next few years, say for the first 2 years. Hopefully by year 3 or so, the restructuring and actually the realignment of productivity in total in Spain might start to show the unemployment rate improving slightly. But unfortunately, I think in Spain's situation, it's going to take time for this rate to start improving.
What can you see happening to Spanish banks in the longer term?
Well, I think what is important is that in the longer term, not only even for Spanish banks, but for European banks in total, there's probably going to be a serious progress on a move towards a more centralized banking supervision system under the control of the European Central Bank. And so I think in general, these banks, specifically Spanish banks, will then over time be under the complete control and regulation of the European Central Bank. And therefore they will be managed much more stricter, the regulations will be much harsher, and these banks will not be managing like the way they did before. And hopefully, financially, they will look much sounder and much healthier.
Thanks for joining me, Merina. Stay tuned to Dukascopy TV for more exclusive interviews and updates. For now, though, goodbye.